We have a professional duty to keep the affairs of current and former clients confidential unless disclosure is required or permitted by law, or the client consents. Firms that share client information for the purpose of preventing, investigating, and detecting economic crime may have a statutory protection for breach of confidentiality under the Economic Crime and Corporate Transparency Act 2023. See our confidentiality and disclosure policy. This protection could apply to information sharing for CDD purposes, and/or to determine whether to terminate an existing business relationship or to decline to establish a new business relationship or provide a service. You are not permitted to make information requests to other firms under these provisions unless you have approval from the COLP. If you receive a request for information under these provisions, e.g. from another law firm, solicitor, or any other organization, please refer the request to the COLP. You must not respond to the request directly, including acknowledging the request. Individuals who register companies or file with the registrar have to prove they are who they say they are by verifying their identity. This is intended to make registering fictitious directors or beneficial owners with Companies House much more difficult. Under ECCTA 2023, there are two types of identity verification: direct verification via Companies House, and an indirect route through an intermediary or agent called an Authorized Corporate Service Provider, or ACSP. ACSPs must be supervised for AML purposes and be issued with authorized status by the registrar. ACSPs must declare that all the necessary identification checks have been completed when interacting with the registrar and Companies House. There are additional record-keeping requirements for ACSPs as well. We are an ACSP and can generally accept these matters. However, we only do this in limited circumstances, and all such matters shall in first instance be referred to Gil Vargerson, Head of Corporate. We have an obligation to keep documents, data, or information used for the purposes of applying CDD measures up to date. Our system to record when CDD records, e.g. passports, are due to expire so you can obtain the updated version or alternative documentation involves setting flags within our case management system on SOS. We are obliged to keep a copy of CDD records, including appropriate data identifying and verifying the client's name, company number, address, board members, directors, and beneficial owner. Appropriate data identifying and verifying the identity of any person who purports to act on behalf of a client. Appropriate data required and obtained under EDD processes. Where we are unable to identify the beneficial owner and so treat the senior person in the company as its beneficial owner, written records of all the actions we have taken to identify the beneficial owner, all the actions we have taken to identify and verify the identity of the senior person and any difficulties we encountered in doing so. Sufficient supporting records, originals or copies, in respect of a matter to enable the transaction matter to be reconstructed. Where we act as a trustee, not for a trustee, we must retain records for a period of 5 years after the date on which the final distribution is made. Ongoing monitoring is an intrinsic part of the CDD process. It must be performed on all matters, regardless of their individual risk rating, in order to detect unusual or suspicious transactions. It is made up of 2 limbs. Scrutinizing transactions throughout the course of the business relationship, including, where necessary, the source of funds, to ensure they are consistent with your knowledge of the client, their business and risk profile. Undertaking reviews of existing records and keeping the documents or information obtained for the purpose of applying CDD measures up to date. CDD and monitoring obligations are designed to make it more difficult for our firm to be used for money laundering or terrorist financing purposes. As well as being a regulatory requirement, ongoing monitoring of client activity can help us to identify unusual or suspicious behavior warranting further investigation. If there appears to be no rational explanation for unusual or suspicious behavior, the matter may involve money laundering or terrorist financing. Know our clients. Really knowing and understanding who our clients are can help to guard against fraud and the risk of committing offenses under POCA 2002 and TA 2000, and it can also help us to provide a better service to those clients. Assess risk. We have an obligation to keep our firm-wide risk assessment under review to ensure it remains up to date and relevant, and we can use information obtained through our ongoing monitoring in that process. Feel more confident that our firm is not being used for financial crime purposes, and assist law enforcement agencies. The more we know about our client and their activities, the more we can help with inquiries from the authorities. You must first understand the purpose and intended nature of the business relationship to have a meaningful basis for ongoing monitoring. This is information that helps you to expect the types of transactions and activities your client might conduct, e.g. large commercial property transaction, small business activities, etc. In most cases this will be self-evident, but sometimes you may need to obtain additional information at the CDD stage. The essential components of our system of monitoring are aiming through our client and matter inception procedures to have as full as possible understanding of our client and the intended nature of the business relationship with them. In most cases this will be self-evident, but sometimes we may need to obtain additional information at the CDD stage, and ensuring we have up-to-date CDD information documentation. Ongoing monitoring for standard and low-risk clients' matters is usually carried out by the fee earner conducting the matter, as they are likely to have the best information and most current knowledge of the client and matter. In practical terms, for a standard or low-risk client and matter, it involves knowing as much as possible about the client and matter, remaining vigilant to anything unusual, and ensuring CDD documentation remains up to date. Don't forget that we have an obligation to look at CDD for existing clients from time to time on a risk-sensitive basis, and including where you become aware that the circumstances of an existing client have changed in a way that is relevant to your assessment of risk for that client. For clients which are corporate bodies, trusts, or registrable overseas entities, ongoing monitoring includes obtaining an excerpt of the register containing full details of beneficial ownership. Where you find a material discrepancy between the beneficial ownership information on the register and the information made available to you, you must report that discrepancy. For standard low-risk matters, fee earners must still complete our client and matter risk assessment form at Appendix H of our Anti-Money Laundering and Counter-Terrorist Financing Policy, which contains fields to record the risk rating of the file and to record ongoing monitoring, i.e. when CDD information materials are due to expire, to record whether the risk rating of the file changes during the course of the matter, the reasons for the change, and any actions taken as a result. For high-risk clients or matters, we necessarily have more structured procedures in place, including a formal record of ongoing monitoring. See high-risk client matter ongoing monitoring form at Appendix G of our Anti-Money Laundering and Counter-Terrorist Financing Policy. Investigating and signing off on each payment transaction. If a client or matter is high risk, then enhanced ongoing monitoring is required. It involves completing our high-risk client matter ongoing monitoring form Appendix G of our Anti-Money Laundering and Counter-Terrorist Financing Policy for all matters classed as high risk for AML purposes. Ensuring payments in a retainer are from an account in the client's name and are for an amount commensurate with the client's known wealth. Ask further questions if they are not. I am responsible for, and we do this by carrying out more frequent reviews of high-risk matters, and we do this through our file audit review process. Closer involvement of Robert Sotiro in the matter. Generally remaining aware of the high-risk nature of the matter and asking relevant questions if and when the need arises. Remaining alert to public information relating to possible changes in the status of clients, particularly with regard to political exposure. New and existing clients who do not initially meet the definition of a PEP may become a PEP during the course of our business relationship with them. You should remember that new and existing clients who do not initially meet the definition of a PEP may subsequently become a PEP during the course of a business relationship. You should therefore be alert to public information relating to possible changes in the status of clients, particularly with regard to political exposure. When an existing client is identified as a PEP, we must apply EDD measures to that client. Almost there. Receiving funds. You must remember that we do not provide banking facilities through our client account. Payments into, transfers to, or withdrawals from our account must be in respect of instructions relating to a transaction or other service. We will not accept funds in any other circumstance from any source whatsoever. We must not accept funds from or transfer funds to a client until the CDD process is complete. If you are in any doubt, please contact the MLCO. Money launderers can seek to disguise the source of funds by having payments made by or to associates or third parties. A payment to or from a third party is particularly suspicious if it is unexpected, occurs at short notice, or is claimed to have been made in error with a request for the money to be refunded. You should complete a third-party payments investigation record at Appendix 17 to the Anti-Money Laundering and Counter-Terrorist Financing. It should be completed before funds from a third party are accepted. There may be some legitimate reasons for third-party payments, e.g. parents gifting a house deposit to their child. You should ensure you do appropriate due diligence, including checking the source of funds before accepting such payments. The third-party payments investigation record helps to ensure you satisfy yourself that the third-party funds are coming from a legitimate source for legitimate reasons. It asks you to consider: are there any obvious warning signs? What do you know about the client, the third party, and their relationship? Why is the third party giving money to the client? What is the size of the transaction? What is the proportion of funding being provided by the third party? How did the third party obtain the funds? Are you satisfied as to the reason for the third party payment? It may be appropriate to conduct CDD on the third party and/or ask for evidence to support any explanations provided by the client. Supporting evidence might include bank statements, filed business accounts, information confirming the sale of a house or shares, confirmation of inheritance or judicial award. Where this is provided, you should check that the evidence is consistent with the client's explanation. Where there is any inconsistency, you must consider whether you need to submit a SAR to the nominated officer. If you are in any doubt, please contact the MLCO. Large amounts of cash can also be a warning sign that the holder of the cash is engaged in money laundering or terrorist financing. You can accept cash only in accordance with our cash policy, which can be found at Appendix E to the Anti-Money Laundering and Counter-Terrorist Financing Policy. Cash is a danger, and not just in terms of suitcases full of used notes. Consider the danger in accepting large amounts of cash over the counter directly at the bank. Equally, just because money comes electronically from the client's bank account does not mean that the money is clean. There is no regulatory cash limit, but our cash policy requires that you do not accept cash over the limit of £250 either in the office or directly at our bank. In every case when a client wishes to use cash, it is your responsibility to consider all the information that you have about the client and whether you have any reasonable grounds to suspect that the client is engaged in money laundering or terrorist financing. If you do hold such a suspicion, you must report it immediately to the nominated officer. Not every payment in cash should automatically be reported to the nominated officer, but you must follow the procedure in our cash policy and explained in the following slides in every case. You can accept cash only in accordance with our cash policy, which we've just talked about. Our cash policy states that you must take into account 3 considerations when deciding whether or not to accept cash. You should consider whether cash is the client's only means of payment, and there is any risk of money laundering or terrorist financing or proliferation financing, and CDD is complete for the client. Depending on the circumstances, you may need to ask for evidence to support the client's situation in order to satisfy yourself that there are no grounds for suspecting money laundering or terrorist financing. The entire CDD process needs to be complete before we can accept cash from a client. If you need more guidance on this, anti-money laundering and counter-terrorist financing, or speak to Robert Sotiro. If you are in any doubt, speak with Robert Sotiro. If these criteria are met, you then need to look at the amount of cash for your next steps. We'll look at this on the next slide. As mentioned earlier, there is no regulatory cash limit, but our cash policy requires that you do not accept cash over the limit of £250 either in the office or directly at our bank. There are exceptions to this if you are satisfied that the conditions on the previous slide apply. If the amount in issue is £250 or under, you can accept the cash providing you Record your considerations and conclusions on the matter file and send a copy to the nominated officer. The same applies for amounts over the cash limit, but in that case you must first obtain approval from the nominated officer. If you are not satisfied that the criteria on the previous slide are met, then you must not accept the cash and make an internal SAR to the nominated officer. Our internal SAR form can be found Appendix A of our Anti-Money Laundering and Counter-Terrorist Financing Policy. A very quick word about responding to investigations, screening relevant employees, how we provide training to our staff on our anti-money laundering and counter-terrorist financing policy and procedures, and how we monitor compliance with them. The MLR 2017 require us to establish and maintain systems to enable us to respond rapidly and fully to inquiries from investigators and other enforcement officers, including whether you maintain or have maintained during the previous 5 years a business relationship with any person, and the nature of that relationship. Our CDD record-keeping arrangements, together with the information we store on our practice management and finance and case management systems, enable us to fulfill this requirement. You must refer any requests from investigatory authorities immediately to MLCO. The MLR 2017 require us to provide training on money laundering and terrorist financing and proliferation financing. All relevant employees and agents will be made aware of the law relating to money laundering, terrorist financing and data protection, including the MLR 2017, POCA 2002, Terrorism Act 2000, reporting requirements, legal professional privilege, data protection requirements, recognition of red flags, risk indicators, any other relevant laws, and trained regularly, at least annually, on how to recognize and deal with transactions and other activities which may be related to money laundering or terrorist financing. Training is provided online or through seminars. Completion of training is compulsory. We will continually monitor training needs, but if you feel that you need further training on any aspect of the relevant law or our AML, CTF and counter-proliferation financing policy and procedures, please contact the MLCO. Screening relevant employees. The MLR 2017 also require us to carry out screening of relevant employees where it is appropriate. Screening involves assessing the skills, knowledge and expertise of an individual to carry out their functions effectively and the conduct and integrity of the individual. We will carry out screening before an employee is appointed and during the course of the appointment. We will always carry out screening where we apply for SRA approval of any new beneficial owner, officer or manager. This will involve conducting a basic DBS check on that person. We will always ensure any information collected for screening purposes is held securely and in line with data protection legislation. We take compliance with this policy very seriously. Because of the importance of this policy, failure to comply with any requirement may lead to disciplinary action under our procedures, which may result in dismissal. We continually monitor compliance with our policy through file audits, review of records maintained by the MLCO, reports or feedback from staff. Any other method. Failure to comply puts both you and the firm at risk. You may commit a criminal offense if you fail to comply with this policy. The anti-money laundering and counter-terrorist financing regime carries heavy criminal penalties, including fines and terms of imprisonment ranging from 2 years for failing to apply appropriate CDD measures to 14 years for committing a principal money laundering or terrorist financing offense. You can get further advice and guidance from the MLCO. So this concludes our session today. Let's have a quick recap of the main areas to bear in mind. Today's session has been a bumper session, which I won't summarize in any great detail. Just remember that money laundering and terrorist financing are real threats that we must always remain alert to. Our anti-money laundering and counter-terrorist financing policy aims to reduce the risk of being caught up in these crimes and sets out what to do if you suspect something isn't right. The CDD process can seem arduous and long-winded sometimes, but it's worth remembering that the more you know and understand your client, the more likely you are to be able to spot something that isn't right, and, moreover, you will be better placed properly to serve and support your client. Any questions?